Differences between financial sector and non-financial sector. Financial sector versus non-financial sector. Financial sector is the part of the economy made up of firms and institutions that can provide financial services to commercial and retail customers. Whereas, the non-financial sector consists of market producers and independent legal companies, whose main activities are non-financial services and production of goods. The purpose of financial sector is to provide loans for businesses, mortgages to homeowners, and insurance to consumers. Whereas, the purpose of non-financial sector is to provide services that are not necessarily suited to banks, serve as competition to banks, and specialize in sectors or groups. Financial sector company or financial company primarily deals with financial services and products, facilitating transactions, managing funds, and providing financial solutions to individuals, businesses, or other entities. Whereas, non-financial sector company or non-financial company engages in business activities that do not predominantly involve in financial services or products. These companies provide goods or services related to various industries such as manufacturing, retail, technology, healthcare, agriculture, entertainment, and more. Financial sector includes a broad range of industries including banks, investment companies, insurance companies, and real estate firms. Whereas, non-financial sector includes retailers, manufacturers, utilities, business service providers, such as accountancy and law firms, caterers, haulage companies, airlines, construction companies, and farms, among others. Financial sector plays a pivotal role in economic development and key engine of growth as it makes savings available to the enterprise sector that in turn uses them for productive purposes. A strong financial sector is a sign of a healthy economy. Whereas, non-financial sector plays a vital role and is a set of institutional units which are market producers, the main function of which consists in producing non-financial goods and services. Their distribution operations and financial operations are parted from those of their owners. Financial sector generates a good portion of its revenue from loans and mortgages, and it thrives in a low interest rate environment. Whereas, the non-financial sector generates goods and services for the market and do not, as a primary activity, deal in financial assets and liabilities. Financial sector include in all financial companies or financial institutions that are involved in borrowing, lending, and at times subject to certain considerations even raising money for a non-financial company. Whereas, a non-financial company involved in a business engaged in anything other than what a financial sector company does. In short, financial sector companies are those involved in retail and commercial banking, accounting, insurance, asset management, credit cards, and brokerage, whereas non-financial sector companies are all resident privately and publicly owned institutional units whose principal activity is the production of goods and non-financial services. The non-financial sector is broken down into two subsectors: public sector non-financial corporations and private sector non-financial corporations. Kindly subscribe my YouTube channel Thesis Helper. Thanks for watching.